We are ready to go with today's webinar on the Community Reinvestment Act, and we have some wonderful speakers for you today from our friends at the California Community Economic Development Association, CEDA. We have Ralph Lippman, Glenn Sonata, and Susan Howard, a special guest, to speak with you today. So with that, take it away, Glenn.
This is Ralph Lippman. I'm the director of the California Community Economic Development Association, and it's good to be with you today. This is the second in a series of 4 seminars that will lead up to the national convening in Austin this August. This is, in our view of the world, one of the important ones, and is the Community Reinvestment Act. We're privileged to have with us today one of the experts on CRA in the United States, recently retired as a community development regulator for the Office of the Comptroller of the Currency, and is Susan Howard. Susan, over 20 years ago when she was running CRA for the Bank of America, the Legacy Bank of America, and she went on to become a regulator, and sometimes crossing that line from working for the bank to working for the government is a difficult line, but Susan crossed it seamlessly. So I'm looking forward to this. I'll be your side commentator today, but the voice you'll be hearing for the next few minutes is that of Susan Howard.
Ralph, and if second pressure, I don't know what is in terms of me being one of the premier people in terms of CRA nationally. But what we wanted to do this morning was to just take a few minutes to bring you, the agencies, up to date on CRA. And to begin, in my experience, both as a banker and as a regulator, I've found that agencies do not necessarily the opportunity to partner with financial institutions. So hopefully by today's session, you'll have some ideas and some strategies in terms of how you might partner with financial institutions to ensure that you meet your goals. So let's start out with slide number 1. This works. We initially labeled this, can the law help me get money for my CED project? But really, it's a little broader than that, I think. Glenn Sonata, who is also here with CEDA, was one of the people who actually worked with years ago. And in truth, we did look at CRA as a tool for getting deals done. So CRA stands for the Community Reinvestment Act, and it's a law that was actually passed in 1977. And the intent of the law at that time was to encourage insured depository institutions to meet the needs of all of their communities, especially low and moderate income areas, and the needs of low and moderate income individuals. And it came into existence because of redlining and certain studies that were done that found that we're not lending in specific areas. Basically areas where they'd actually drawn a red line around those areas, areas that were low income and actually had large populations that were that consist of minorities. And community action agencies are very much the goals of CRA from the standpoint that they're looking to alleviate poverty. And so it's been interesting that there's never been a real link between the agencies and the financial institutions. So what I thought we'd do is we review the requirements of the law first. Nothing happened. There. With me on technology, people. I apologize. First out was CRA Compliance. And in terms of compliance, there are examination procedures. And these procedures actually are made public there are a number of websites that I'm going to include, that are included in this presentation, and I just hope that you will begin to utilize them, because they will actually tell you what's involved in terms of a CRA exam, the information that's required. Basically, what it requires banks to do is to measure their credit, service, and investment opportunities and the needs of those communities that they're serving, and agencies will indeed actually report on that. I'm going to touch on a couple of things in terms of banks overall. Agencies, as a public overall, have the right to know what's going on with financial institutions in your communities. One way that you can ensure that financial agencies are in compliance is when you go into a bank branch, you can ask to see a copy of the public notice. So you know that there's usually a set of placards in a bank that talk about some of the federal rules, state rules. Well, there's also one that talks about CRA, and it's called the CRA Public Notice. And most financial institutions will have at least one person there who knows what the public notice is. It's all important because that public notice lets you know that if you have any concerns or complaints that are related to the Community Reinvestment Act, where you can address that complaint or that concern. And it also lets you know that you have access to something that's called the public evaluation, which we'll talk about a little later. But to the actual examination procedures. The procedures include evaluation of the actual quantity of lending, service, investment that financial institution has provided, but it also includes something that's a little more nebulous, but really can be to your advantage, and it's called an evaluation of the quality activities that the financial institution provides. And those analysis addresses the complexity, the needs, and the opportunities. One thing I do want to state is that CRA does not require a bank to provide any services, any loans, or any activities that are not safe and sound. In other words, a bank does not have to do anything that will cause it to lose money. Yeah. I indicated that CRA compliance is determined by exams that are executed by the bank regulatory agencies. There are actually 3 regulatory agencies. There's the Office of the Comptroller of the Currency, or the OCC, and they supervise all banks and savings institutions. And usually these are the really large financial institutions, the Citibanks, the Chases, the Bank of America. And one clue to the banks that are supervised, or financial institutions supervised by the OCC, is that they will always have national somewhere in their name, or the initials NA. AD, and actually it's a number of banks, is the Federal Reserve System, and supervise all Federal Reserve member banks and savings institutions. There are actually 12 Federal Reserve banks scattered across the country. And actually they supervise the largest number of financial institutions is the Federal Deposit Insurance Corporation. And they supervise all state chartered financial institutions that are Federal Reserve non-member banks and savings institutions. And as I said, they supervise more than any of the other agencies. CRA exams measure the following. They measure lending, and that's loans to and for the benefit of low moderate income individuals and communities, and usually includes branches and other products, programs that actually meet low and moderate income needs. Investments includes contributions, grants, and actual investments to organizations or programs that benefit low and moderate income. And then they also measure community development. And community development is activities that meet the primary definition of community development. And of CRA, development activities are affordable housing for lower income, and that includes single and multifamily projects, community services targeted at low and moderate income, and as I said, that includes branches. It also includes accounts, programs, then activities that promote economic development, financing small businesses and farms. And this is a little tighter in that these activities must meet the SBA or Small Business Investment Corporation company size eligibility requirements, or have gross annual incomes of $1 million or less, and the last two activities that community development are those that revitalize and stabilize, and they must address low and moderate income geographies, designated disaster areas, and disaster areas that are designated by HUD, and for underserved, non-metropolitan, middle-income geographies. And it's a long title to basically say that banks are also required to provide services to rural areas. It also takes into consideration activities that encourage support for neighborhood stabilization activities, which encourage banks to support eligible uses, make loans and investments. The thing with the NSP activities is that most of those activities have kind of come to a close. But at the same time, when there was the housing crisis in 2008, later, basically HUD designated what they called NSP areas and went out, and financial institutions provided support. The decision for community development requires the bank to engage in any or all of the following areas: the loans, the investments, or services. So in other words, a financial institution can say, in our area, we see there's a need for community development loans, or we have a need for community development investment, or all three. But the financial institution has to indicate to the regulator that they see that there is a need, and they must substantiate that need with appropriate. So, in most instances, those activities have to take place within the bank's assessment area. And an assessment area is actually the service area. And mostly it's broken down into census tracts, but at the same time it can actually include rural block service areas. So what I would encourage you to do is to review the data that's available on various websites, those that are offered by HUD, by SBA, and by the regulatory agencies. And most importantly, the website that has actually all of the information relating to CRA is the Federal Financial Institutions Examination Council website, and that's FFIEC. Now, the CRA performance evaluations that I've mentioned are actually rated. And some of you may have heard of some national organizations have expressed concerns regarding this so-called rating system. But financial institutions are rated as outstanding, satisfactory, needs to improve, and substantial non-compliance. And the reason that these ratings are important is, number one, they are public. So since they are one of the few documents in terms of a bank's performance that is open to the public. An institution that receives a needs to improve is an institution that cannot grow. So in other words, when that institution elects to even do ATM machine, a branch, merge, or to acquire another institution, a need to improve can prevent that from happening. The process. So total noncompliance can actually prevent that activity from happening. So it's very important for an institution to be rated outstanding or satisfactory in meeting the needs of its community. These are available in those performance evaluations, and as I have said, those PEs or performance evaluations are available on the FFIEC website and actually on the websites of each of the individual regulatory agencies. One thing, too, in terms of these performance evaluations is they are actually listed on the individual agency websites 1 quarter before the CRA exam is to take place. So where you are throughout the country, all you have to do is go on that website and you can find when an institution that you are interested in is going to have an exam. In terms of CRA compliance, in 2005, there was this new term that came up, and it was called performance context. And performance context is important not only to financial institutions, but it's also important to you. The inclusion of performance context enables examiners to consider qualitative information in addition to that quantitative information that we talked about. So it's related to demographic, community, and just overall bank-related information. Includes factors that may affect the bank's lending, service, and investment performance. And another component is that it includes something called community contacts, just information that comes from outside sources. Now, contacts are also included in the overall CRA exam, but the process has been stepped up in terms of performance context because then it's more important for a financial institution to find out truly what's going on in their communities and information that you provide. You can provide that as an agency that's operating there. And sometimes CAPs don't always in touch with some of the other programs that are going in communities. So, as I say, it's an opportunity not only for you to learn more, but for the financial institution to learn more. So I would suggest that once you use those websites, know when an exam is coming up, it's good for you to contact your bank. On exams, and we're on the home stretch in terms of talking about them, but there are actually 3 primary types of CRA exams, and they're based on size. What happened was some of the small banks, those with assets of, in this, it changes every year, but now it's $304 million or less, they were complaining that they were being examined with the same criteria that the large financial institutions are examined under, and they didn't feel that it was fair. And actually, there's some merit to that. So, in the law, actually was in 2005, was that small banks were examined with a focus on their lending activities and on customer complaints. That included lending activities basically within their area, to low and moderate income communities, but just lending. traditional lending. When we're talking about probably residential and small business lending. Then there's intermediate small banks. And those are the institutions that have assets of $304 million to $1.216 billion in assets. And they were similar to small banks in terms of the lending activities, but they also have a mandatory review of their community development activities. And as before, those included, lending, service, and investment activities. There were the large banks. Large bank exams were institutions with assets of $1.216 billion or more. So those are basically the mega banks. And those include a review of lending, investment, and service activities. At the bank's option, there's a review of their community development activities. And we have found that with most of the large banks, they do want a review of their community development activities because they have seen this is an area where they can actually excel, and it gives an area of more flexibility than they have with just the traditional test. Types of exams that review the activities of financial institutions, wholesale limited purpose institutions, and those with strategic plans. And in both of those instances, primarily wholesale banks, you're talking about the credit card banks, banks such as those. And then institutions that have strategic plans actually have those plans that are approved not only by the agency, but also those plans are made public. So they require public comment prior to approval. And then the banks just have to comply with those plans. So now we're going to move into what I really kind of think is the meat of this presentation this morning, and that's the CRA strategy. And what I can say is that a success strategy requires the following. You need understanding of the local market, an understanding and knowledge of local financial institutions, and I have some points there that you need to address. Knowledge of local sources of influence, and understanding of local financial institution needs. What I say is most important, you focus on relationship with a financial institution prior to actually addressing that institution in terms of any loans, investments, or services that you hope to have participation. So that means that, first of all, you need an account. You need a financial institution and the services that it provides in conjunction with CRA. And if you're interested in opening an account, you need to research that institution prior to opening the account. Realize is that you have a major tool for leverage, those accounts that you have, especially with cap agencies. You run large deposits through financial institutions each year, and it's important that you understand the value of that, especially when you want to participation in any program, products that you might fit the constituencies that you serve.
And Sonata, and really important because back in the days when Susan and I were working at Bank of America, when nonprofits and large organizations suddenly decided to put out their banking services to bid, we actually put together teams, people from the retail side, people from the commercial bank, people from the foundation, to go meet with the different organizations to put, kind of the best-selling face forward. So, a great opportunity to really have folks coming to your organization and kind of fawning over, your vision. So, and it's a good time to start figuring out what kind of relationships you want going forward and things you might need.
Now to the strategy, you will obtain how the proposed program or product will actually benefit the financial institution in conjunction with how it's going to benefit you. And market is always key. They want to generate income. They all want to improve their institution's reputation because ultimately that feeds back into market share and generating income. And rating is still important. Although you may hear from different sources that it doesn't mean that much, it actually does. It has actually, over the last several years, begun to really slow down some major mergers and acquisitions that have been proposed. And something that you would know if indeed you're following the news. So definitely keep in mind because CRA does still have some power.
It's really an important point because being with the bank in the past, whenever the bank wanted to acquire something or merge or expand, there was heavy focus on us expanding community development activities. It's kind of like everything you've seen banks do on the community development side over the last 20 years, whether it's investing in tax credits or doing foundation work or making different kinds of foundation grants, all come because of CRA, and it's a really important tool and very important to banks because it does mean a lot of money in terms of their ability to either expand or for them to do anything to move forward. So it's very important. It's very costly if things are held up.
You know that Ralph, that endeavor relationships are primary and everything else is secondary. And if following the steps that Susan's laid out, by this stage in the process, you're able to state your value proposition to the bank. You have come to a meeting of the minds on what sort of benefit you can bring to the bank and diversify.
For you to know that for many years, the banks perceived the cap agencies as basically government agencies. And so they hadn't really considered the fact that they could actually provide funding for specific programs within your agency. That's just over the last several years. And so this is an opportunity for you to approach a financial institution with some of your programs. Maybe indeed the bank is not going to be able to support, say, your energy program, but could definitely provide accounts for some of your constituents. You might look at them actually looking at what we see, cash checks for constituents of CAP agencies or similar agencies that serve low and moderate income communities. These are a couple of things that we're throwing out, and as we move further on in this presentation, we'll try to give you some more ideas. Now, process. So they really require an understanding of the local market, including the economy, the demographics, the institutions that are there, the competition, local government, community resources, all of this. There needs to be knowledge of successful projects and existing partnerships that are there in the community at this point in time. In other words, not necessary for you to reinvent the wheel, and it's not appropriate necessarily for you to ask a financial institution to do that. I would say one thing, when Glenn and I were working for the bank, one of the things that we did, in addition to providing financial services, we actually used to do grants. And at one time, it got a little confusing in some communities when we would literally have 4 or 5 organizations that claimed to be housing organizations with, say, a mile. And that's just too many organizations. You're not able to truly economy of scale that you need to meet those community needs. So basically, that's when you end up with the big no from a financial institution. So therefore, know what's going on in terms of programs and projects. You become familiar with multi-sector and collaborative partnerships, aware of the successes and the real deal challenges. You need to assess community support for your plan. By that, it's not appropriate for you to submit a plan to a bank, for a bank to get on board, and then to find out that the community is against it. So know what's going on. And you ascertain the business opportunity for your partnership again. Great customers, revenue, reputation. Now, you want to assess your organization's strength. You consider your management or staff on board that has the ability to execute any program or plan. You want to have your organization be as financially strong as possible. Financials may ask to see your audit, and it needs to be a sound audit.
Again, and this is one of the kind of neat things about CAP agencies is that, you know, most of the CAP agencies out there have such a strong history in providing programs and services in an outstanding manner. You know, you've got a really strong track record. You know, you've been keeping books for a number of years, so you know exactly how to get things done. When banks underwrite and look at different organizations, that's the first thing they're going to focus on. In a lot of community development groups, especially the newer ones, they don't have that track record. They don't have that capacity to actually manage their projects going forward. So, you know, in a lot of ways, CAP agencies have a huge leg up in terms of capacity, in terms of ability to really pull off projects, and it's a proven ability. So, that in mind.
Your organization's reputation within the community. Is the public of your services, are organizations critical? You want to know what's going on in terms of how other organizations and individuals perceive your organization, so that you actually meet any questions that may come up in terms of that financial services organization that you want to partner with. And you want to consider the cost. Is it a very expensive program, minor cost? That makes a big difference too. And as for didn't have the experience in your targeted area of interest or of the plan or of the program. And the office is going to chime in though. You want to, if you are looking at going into a new area, there's nothing actually wrong with that, but you consider partnerships, you want collaboratives, possible joint ventures. Those are opportunities for you to gain experience in any area that's something new. And that's a tool that the banks will look at, and they will consider that as something that they can measure as they move forward in terms of funding and providing especially loans for your organization. And Glenn tell you from experience, we were mentors. One of the things that we had to look for was experience. And so what we saw was some of the very, very large now national organizations actually went in and ran training programs and joint ventured with smaller CDCs. And such, the experience that those CDCs gained with the first project or two was used to be able to leverage additional loans and to grow those relationships with those organizations. And so I can't reiterate that enough. I don't know your thoughts on that.
It's in a lot of instances, you know, it's kind of like groups are doing housing. It's such a field, and a lot of the funding sources require experience. So, instead of having to your own development, it might make sense to partner with a housing developer to come in and be a partner on the project. It makes it a lot easier, things go a lot faster, and you have the expertise in place. The same with any other type of development activity that you might be involved in. If something that isn't your strength at this point, think of partnerships and think about, who out there can come in and you can work with to make things move more smoothly.
So if you're a lender, you might be, and you didn't have a track record, probably looking for a joint venture partnership with somebody who had a strong back room, or you know, some sort of lending activity where the risk between you and the bank and some other institution. And I was going to say, this is Ralph again. I'm a former grant maker. And Susan's done a really good job, I think, of highlighting what the criticals are. And when you're a grant maker and you have a checkbook in your pocket and you go to an event, one of the things you do is you turn your name tag around so that nobody knows that you're from that institution and you have money to give away. But under what conditions do you decide to make an investment or provide a service? And while she's highlighted some of those, I think they go across the board with would you gamble on a startup, or would you gamble on somebody who's out of the region who has deep experience? And I like tastes great, less filling. The truth is somewhere in between. You need to build strong local experience. And one of the good ways to do that at the outset is to find a joint venture partner who understands that their responsibility is to transfer this knowledge to you over a period of time, that they'll leave you small and dependent forever.
Good. Also, one opportunity is you may consider some of the regional, state, and national CRA coalitions in your area. And primarily, it's important to know what some of the issues are that relate to low and income communities and individuals, how banks are in compliance. You need in that you don't want to necessarily sign on to every letter that goes out or every protest that these organizations have, but they are genuine resources in terms of understanding what's going on with institutions in your community. Because relationships are very important, but you also need to do your research and there are organizations that can provide support for you.
You know, things that has always amazed me is a practitioner organization and watch carefully what the bank bashers do. And oftentimes it's very interesting, but I want to make sure what bank's behavior is doing to practitioners, people who are certain activities in a community or wish to do so. One of the things you'll find is if you do sign on to one of these letters, people do this. It's a very powerful tool. First, it goes on the internet, so everybody in the United States knows that you signed to this letter. And in many cases, I will get a call from Washington directly from a regulator. I'm one of those so-called community contacts. I'm very judicious about what of these issues I want to take on, and so oftentimes I'll take the template letter and tailor make it to what I think the concerns of a practitioner are. As was said earlier, when you do this, you're really slowing down an institution's ability to carry merger, acquisition, finish their exam. And I guess the very first one of these I ever signed on, which was between Security Pacific and Bank of America, and a call from the management at Bank of America saying, "What do you want? This is costing us $1 million a day."
Right.
And so I learned to be very careful about stating what the area of concern I have. But I don't think you can underscore what a powerful tool this is if you use it wisely.
Great. We wanted to run through some examples, and both Ralph and Glenn chime in terms of ways that banks can participate through partnerships involving any or all of the following. Affordable housing projects, and obviously that includes single, multifamily, site, special low-income targeted programs, just programs, anything that has housing in it. And also, housing also takes into consideration homelessness, and so that's why supportive housing projects are so important. Homeless overall is important, so it actually runs through all of the tests in terms of loans, investments, and services. So keep that in mind.
And every bank is different, so many banks aren't going to have an appetite under affordable housing to talk to you about pre-development loans or acquisition loans. Most of them do construction loans, do permanent loans, surprising few. So each of them are going to look at differently. You want to know what the product they have to offer is, and I would say in addition, and as Susan said earlier, safety and soundness is the driver here. So there is no such thing as a CRA loan. You have to go in and present to them that this project pencils out. You may be able to show them that it pencils out under different terms than they would like to talk to you about. They could shave a quarter point. You could make a tricky deal work. But don't go in and say, well, you need CRA credit, because there is no such thing if it's a good ask.
And an important point, you have to really do the research and understand what bank you're talking to, because there are business banks out there that focus on certain size business lending, and it doesn't make any sense for you to be in there asking about affordable housing financing. So it's that basic research that's really important.
Times when everybody's talking about gentrification, I know how I could solve gentrification in my neighborhood. Give me $100 million and let me buy up the existing land. Make sure it doesn't fall into the hands of the private sector. But I have many banks who want to talk to me about making sizable acquisition loans to me.
That is very Next is obviously low and moderate income home, business, and consumer loan programs. And I mentioned some of the housing programs, but there are also programs that may be offered to support truly small businesses. There's been criticism of the fact that banks make small business loans, and those are small business loans that are $250,000 to $1 million. You can have an institution that's truly making small business loans, loans of less than $100,000, or even micro loans, loans of less than $50,000. That would be a program that might benefit a financial institution. Once again, we're going to look at the risk involved, but still, it's a program that might support the needs of a low-income community. Also, there are consumer loan programs. One of the most notable is the Federal Deposit Insurance Corporation's small dollar loan program. And some institutions have embraced that program, but many are unaware of it, and that might be a tool that might benefit your constituents. So don't hesitate to after your research, see what kind of financial institution it is, and if it's a retail institution, it might possibly consider taking those kind of loans. Now, this third category are the community. These are the community development financial institutions. Actually, they are just the, I guess they're like the golden children, right? In terms of financial institutions, most of them want to, if you have a CDFI that is your partner, or if your institution actually is a CDFI, you should know that financial institutions will be interested in investing with you or lending, primarily because of it that's prepared by takes place by the CDFI fund, which is indeed, it's a government institution. It's part of the Treasury Department.
So Big Treasury has a program, you apply for it, and you meet a lot of different hurdles for you to become a CDFI to get that designation. And that is kind of the litmus test that banks have, the very basic one that you'll see a lot of banks out there just looking for CDFIs to invest in because they meet a certain standard.
Well, it's been an interesting mosaic the last couple of years. If you're following the thread of this conversation, the regulators are looking kindly upon investments to CDFIs. So the CDFI industry has very wisely positioned themselves over the last 2 years to go and recapitalize their funds. So it's no longer just a case of the big guys, the national intermediaries and regional CDFIs doing well. There are a number of smaller, local, and very relevant CDFIs. We can go over the process in another webinar, but the initial process is difficult, but once you get that designation, you're quite well, typically.
Very well. Participation. And just by the way that CAP agencies are structured, you have a banker on one of your boards, and consider that. In financial institutions, bankers do get CRA credit for participation on the boards of community-based organizations, including CCs, CAPs, or going to benefit low, moderate income individuals and populations. So that is definitely a consideration. You don't need to just necessarily your overall membership, but definitely consider bankers. Financial education programs. And these are really important because banks have found, and actually research has found over the last 15 years or so, is that people know very little about financial education, about their finances in general. So there are now financial education classes that many of the large institutions provide. The FDIC, once again, Federal Deposit Insurance Corporation, actually has a program called Money Smart, which actually your agency can download, and you can actually make it your program. You can use your logo. They have no problems with that, and it's available in several languages. So, found that low and moderate income constituencies really do need financial education. You know, you hear so much about the check cashers, about the loan programs that are offered to these organizations, payday loans, and they definitely are just providing just for those communities. Financial education is a key program that actually I would say all communities need to have.
I mean, people have.
I don't know.
No. Oh. Okay.
2005, another area that approved by the regulation is the area of being able to get credit for having targeted staff participate with an organization. So that's that no longer do bankers just have to serve on the board, but your organization needs IT help, they need resources assistance, marketing assistance, it's appropriate for you to contact those institutions to find out if indeed they might have staff that's available. They have CRA credit for that. Make sure that when you're contacting that organization, it's an organization that you do have a relationship with, though. They're not look kindly at a request from a bank from a cap agency that they know nothing about.
And this small as, let's say, 1,000 brochures that need to be printed. Sometimes the larger national banks have huge systems like that. So I sometimes ask a bank, send this for me, and then they can run it as service and a contribution, and I get my brochures for free.
Right. And you're really has been constraints, right?
That's right.
Yeah. And not least are the contributions. And that we mean that table at your annual event, but what it is when they fund a team or whatever for that, includes actual grants in terms of programs that your organization may offer, and it includes investments. And the investments are most important when you're getting into some of those community development activities that we've mentioned before, but they become substantial. It also means that you need to do some research. You need to do some research in terms of the size of those contributions, grants, and investments, and also in terms of the timing for those contributions, grants, and investments. But and that financial institutions are looking to actually participate in activities more than they have in the past. So the page that I have is actually a few of the websites. There are the rates for you, for the three agencies, and then for the Federal Financial Institutions Examination Council. That is the key one. They're in the blue at the bottom. So now,
one kind of important point also is the regulatory agencies. One of them have regional offices and a regional person for community development. If you want a shortcut in terms of finding out who's doing what and who's not doing what, you should really get to know who that person is in your region to get indication of who you should be talking to and what you should be talking to them about.
So the questions 1-1, do we have time for that, or?
she said we had an hour and 15 minutes.
Okay.
We do extra 15 minutes for a Q&A.
Okay.
So the first question is, are all required to follow CRA regulations and compliance?
Yes, all insured depository institutions. Now, that does not include credit unions, nor does it include mortgage companies. So it just pertains to insured financial institutions. So, you know, when you actually go into a bank and it says FDIC insured, they are subject to CRA.
Remember, the underlying tenet of the law is that this bank is required to do activity in areas from which it receives deposits.
Exactly.
So if they're taking deposits at one of the institutions that Susan really as exempt, then they are to CRA, and someone there, maybe not in your local branch, be able to tell you what their current CRA rating is and when the next exam is, or you could pull it off of one of those websites.
And actually, if indeed you go into your local branch and they seem confused, ask them for information in terms of the location of their CRA officer. That person will always have that information for you. Or you can, at the public notice that has to be published in the financial institution.
The next question is, as a cap agency, we're looking to establish small business. Will the businesses be eligible for CRA funding, or does the requesting party have to have a nonprofit status?
The agency itself is looking to establish a small business. I guess I'm a bit confused. Is it the agency that's establishing, or is it
yeah, I think it's
more like a loan fund?
Like a social enterprise starting a business, and it's underwritten by the bank like any other business. So startups are going to be the hardest thing that they'll ever want to fund. They'll be looking for experience and other capitalization. So the shortcut to it is to work with a CDFI that the bank finances. So the community development financial institutions or the different loan funds out there that bank might support might have a fund available that will look at these kind of deals, a more startup-related type business activity, or the ones that are a lot more difficult to finance. So, you start talking about bringing debt into a project, it's going to be underwritten. And do you want it underwritten by a commercial bank standard, or do you want it underwritten by a more friendlier CDFI? And usually the CDFI will be your best shot.
Yeah. Okay. As a cap agency, we're in the future looking to, once again, okay, it's the same question. Yeah. Sorry. Okay. So there's something else.
Does anyone else want to raise their hand at this point?
I have another question or two in queue. Next up, someone wants to know what would you consider an appropriate funding amount to ask for a loan or a grant?
Well, again, that's going to depend on the need, and it's also going to depend on the institution. That's what we're saying. If you're going to a small or intermediate small bank, I bet you know that their average, when you look at the listing, and the CRA public evaluation will show you what the size of loans and grants are. When you get that report and you see that, well, maybe they are grants of, say, $20,000. That's the maximum that they're making. Well, then you know that you can't go in with your request for a $100,000 grant because that's going to get declined. So that's that research component. You want to make sure that you know what kinds of loans and grants and the sizes that the institutions are providing. And then whatever your program or project is, that's how you make it appropriate.
And I think every institution has a strategic giving model. Institutions like to make a series of what I would call relationship grants, months in the $2,500 to $5,000 range, perhaps. I like to do that, and then every year make what they would call a signature grant. We'll sponsor your dinner, we'll sponsor your event. Others like to pick 2 or 3 winners and say the rest of you are on your own. I think that's something that you learn by talking to the bank and doing your homework about limiting their giving to Little League, the League of Conservation Voters, Junior Achievement, and the Boy Scouts, right. Or looking to a broader definition of what community development is.
Is there strategy, kind of jumping backwards a bit, is, if you have a banker on your board, or if you're talking to a bank about having their folks come out and do some educational classes and that kind of thing, the more they know you, or the better you know you, the better shot you have at any kind of grant. So, build relationship.
Come over to the shop, too. It's fine to go visit them in their shiny branch with the marble floors. But I am of the belief, and have been my entire career, that if I can get you in the car, you're going to make a grant to me. Because oftentimes people, no matter what kind of you live in, large, small, urban, rural, they don't really have a complete understanding of what community development environment in their community is until you grab them by the collar and take them out and show them.
Right. Reiterate the importance of a tour. So make sure that those bankers are aware of what's really going on. Another question in terms of the last website that was listed in blue, and that website was the one for the Federal Financial Institution Examination Council, and that is ffiec.gov. But Kat said, I guess it will be sent out tomorrow. Another question there. Why so reluctant to let the community know about CRA funding? You know, it's not necessarily so all banks are reluctant. Some are reluctant because they haven't done anything. But others definitely want you to know about it. As I said, reputation is something that financial institutions take very seriously. They want you to know about it. The fact is, whether they want you to know or whether they don't want you to know, go on that performance evaluation, the last PE that the bank had, and that'll give you more information probably than you even want about what the bank's been doing in terms of funding and in terms of lending. So if there's, we went for your time this morning.
Let me switch to the last slide here.
Want to go back?
No, the next forward.
There's a how to contact.
Yeah, I've got our different email addresses on there, so feel free to contact us if you have any further questions. You know, we're available to answer emails, no problem.
And as Ralph prefaced this session, kind of whipped through CRA. There's actually a lot more to it, and if you do have questions, or please don't hesitate to contact us. We'll just go into a little more detail with you.
We'll look forward to the next conversation. Thank you all very much for participating.
Thank you, everyone. We hope that you'll join us for the third webinar next month in our CED series. And as mentioned at the beginning of today's event, they are kind of leading up to or culminating in the Community Action Partnership's annual convention, August 29th through September 2nd in Austin, Texas this year. We do have several CED sessions kind of in process, getting lined up, including CECITA coming out on job creation strategies, affordable housing development, and food deserts. If the CRA is part of your specific interest, we are looking at a session on using the CRA to affirmatively further fair housing, so that might be one that interests any of our CED practitioners out in the field, along with some of the usual suspects such as IDA programs and some innovative work around repurposing older structures and programs attached to them. So again, I think we have a great lineup both at the webinar series and at the annual convention, so hope you will join us, and do reach out to our speakers today, the emails up on the screen, or to us at the Community Action Partnership, and we will get those routed to the correct people, get you some answers. Have a great rest of your morning or afternoon.